Hi everyone, this is Ramanuj here. Thank you for joining me. How are you guys doing? How many of you are attending my session for the first time, or have you attended before? Introduce yourself in the chat. If you have never attended my session before, write 0. If you're attending after some time, like if you attended more, if you have attended 1, 2, or 3, you can write the number of sessions you have attended before. 1, 2, 3, 5 plus, 10 plus. Yeah. So welcome everyone. Hi Abhishek, hi Sahil. Introduce yourselves. Who are you? Where are you logging in from? What do you do? Before we begin, please introduce yourselves. Introduce yourselves in the chat, please. What do you do? Where are you logging in from? Hi Maureen. Maureen logging in from Nairobi, Kenya. Welcome Maureen. What about others? Abhishek, Arun, Kavita, Rupesh. Introduce yourselves quickly. Sahil Bahare, first year in GLC Mumbai. Great, welcome. Vishnu, Shivaz, what do you guys do? Where are you logging in from? What brings you to today's session? What are you interested in? Tell me quickly. Hi Abhishek. Hi Rupesh, law student, Navi Mumbai. Okay, I'll jump into today's presentation. So we are going to talk about something very interesting. We're going to talk about the Delaware flip and Singapore flip, right? So what are these things? What are the business advantages? What are the legal issues? Why do companies do these things in the first place, right? So we're going to talk about that. So any of you know what is a Delaware flip or a Singapore flip? Any idea? Or are you hearing these things for the first time? Guys, it would be nice if you interact also in the chat and not just keep quiet. This is not a passive session. Please participate. Welcome Shevas from Gwalior. So what do you think? Have you guys heard of this before? Yes, no, maybe? Tell me in the chat. So what is flipping in the corporate finance world? Okay, do you guys know what is flipping? Is setting up an offshore entity for various tax and investment advantages. Okay, so basically you want to set up an offshore entity and you have say for example you have a business in India or South Africa or Vietnam or wherever, China, but you don't want the ownership of this company to be in this country. You wanted the ownership to be in some other country, maybe in Singapore or USA or in some other place. Okay, how can you do that? How can you, let's say I'm running a company in India and I want the ownership of this company to be in the US for some reason. Delaware flip in Delaware in the US, which is a corporate haven in the US, very common for companies to incorporate there. But if I want to have a holding company of my business in India, in the US, is that possible? Of course it is possible. And that is where a Delaware flip or a Singapore flip comes in. Okay, can be done in other jurisdictions as well. It's not like the Delaware flip is the only flip. You can flip into any other jurisdiction technically, but why would you do so? Like, you don't just, it's not a game. You don't flip the ownership of your company in other jurisdictions just like that. Okay, there are some very critical reasons why people do this. Why are we discussing this? I am discussing this because right now an increasing number of Indian startups are flipping their holding companies to other business friendly jurisdictions. Okay, and not only in India, it can happen in any developing country, it can happen in any underdeveloped country. it probably won't happen in a developed country as much. It's more likely to happen in either a developing or an underdeveloped country, and it's happening in India a lot, right? And what do you want to know about flipping as a lawyer, or how to help guide your clients? So if you are a corporate lawyer, this thing can come up. If you are a whether you are a corporate transaction lawyer or a tax lawyer or an international business law expert, helping people in international business expansion and market entry, this is very, very important. Okay. It is often a good idea for startups and businesses in general to have a holding company in a jurisdiction which has friendlier laws for businesses to thrive, okay, and run Indian operations or any other, whatever, their country's operation as a subsidiary. Can you guess why this is the case? What could be possibly the benefit of setting up your holding company in a foreign country, let's say in the US or in Singapore? Any idea? Or in some other tax haven country? Why would you want to do that? Any idea? Give it a shot if you can think of it. I'm going to tell you anyway in a moment, but you could try taking a guess. Tax benefit maybe, okay? Tax benefit could be a reason, right? It is often a good idea for startups and businesses in general to have a holding company. Basically, the friendlier laws is a big reason. Okay, friendlier laws in business-friendly jurisdictions. I'll tell you in a moment what kind of business-friendly laws. However, for investors, it may mean a lot more. They often feel secure to invest in a holding company that is in a jurisdiction that they're familiar with. So imagine that you are dealing with US investors. US investors are comfortable to invest in a Delaware company. They are not going to or in a US corporation, so to speak. They are not going to invest in an Indian corporation. A lot of them will absolutely refuse to do so. Okay. For example, all the Y Combinator companies. Okay. So for example, an Indian company or African company startup gets into Y Combinator. Okay. Do you think, Y Combinator puts in money, or, Techstars, these are the accelerators. They put in money in the company, right? So do you think that they are putting in money in the Indian holding company or the Indian startup in India? Absolutely not. They ask the startup to incorporate a Delaware C corporation, and in that they invest. And that Delaware corporation owns the Indian business. So it is flipping. So for example, if you get incubated from Africa or India in Y Combinator, so you'll have to flip. Make sense? Okay. So basically, if you are running, so for can you give me examples of any Y Combinator companies from India? Do you know there are many famous Y Combinator companies from India? Do you know who they are? Anybody knows? Nothing? Razorpay, for example. Razorpay is an example. There are many other. Interview Street. There are so many Indian companies which are, Y Combinator. They have gone to Y Combinator. Paytm is not a Y Combinator company. Anyway, so, and not only that, now imagine that I am going to raise money from investors in any international investor, then chances are high that they will be more comfortable to invest in a Singapore company than in an Indian company. Because if I invest in a Singapore company or in a Delaware company, then the laws of those countries also protect me, because they have, for example, if a shareholder does something, or let's say the company, the majority shareholder does something wrong with the company, the minority shareholder can actually can start something called a class action suit in the US. But in India, it is not available. Just an example, right? So international investors are more familiar with laws of Singapore, laws of US, and they are simply much more comfortable investing, which means that you might be able to attract more investors and better investors if you have a holding company in Singapore or in USA, or maybe in Dubai for that matter, right? Many investors would never want to be a director in an Indian company, for instance, due to strict directors liability law here. I will give you an example. In India, even if a check bounces, you can basically implicate the directors of the company into a check bounce case. You realize what I'm saying? There's a director in the board of the company and the company's check bounced. Okay, then what will a lawyer do? The lawyer is trying to recover money from the company. They can even implicate the directors of the company in that matter, right? That is how it is under Indian legal system. And the director will become liable under the law. So basically people prefer to invest in jurisdictions where such laws are not there. So if you are director of a holding company, then you can avoid the director's liability laws in India by doing this. So if you incorporate a holding company in Singapore or Delaware, that can open up some investment avenues that are otherwise closed. So for example, I will tell you, like, if you want me to invest in a company in Africa, okay, let's say in Sudan, and I find this company really good and I am ready to invest also. Okay, I find this really good, but I don't know the laws of Sudan. Okay, and I don't know how, it is too scary for me to invest in Sudan, and what will happen, what I might get myself into. But if you tell me that, okay, you invest in the holding company of this in USA, I might be more interested in doing so. Or you invest in the holding company in Singapore, I might be more interested. Exactly, this is what is going on. Okay. There may be a bunch of other benefits too. Actually, this is a very big benefit, that invest in more investor friendly, and it is easier to raise investments in these jurisdictions. But there may be a bunch of other benefits too, such as low tax on international sales, less capital gains tax at the time of an acquisition, etc. Okay, I will give you more examples of this. How can there be low tax on international sales? How can there be less capital gains tax at the time of an acquisition? I will tell you. Okay. There are also some corporate governance norms that make it attractive to investors or even founders. Okay. Let me actually give you the example right away. Okay. So for example, let's say in Dubai. Okay. In Dubai, if you do any international sales, there is absolutely no tax. There is anyway no income tax. And even there is no consumption tax on that. Okay. There is no GST, no VAT, nothing on that. And even within the country, if you within Dubai you do business, within UAE, it is only 5% compared to, let's say, an 18% GST in India. Even in the US, or in European Union, everywhere the taxes are very high, 30, somewhere in the 30%, right? In some places it could go up to even 50%, right? So there may be a bunch of other benefits too, such as low tax on international sales. So if you have a lot of international sales, you may not want to pay the income tax that you pay in India, or you may not want to pay it, you may not want to pay taxes that you pay in the US or Europe also, for that matter. So if you have international sales, you may want to house that international sales in Dubai, for example. A lot of that is one reason, but actually in reality, you might end up paying taxes in that jurisdiction where you are having the sales. Okay, if you have a permanent establishment there, then you might be paying income tax in that country, which may not be necessary because a lot of businesses these days are digital. So you may not have any permanent establishment because you're a digital business. So you might be able to avoid paying income tax in many countries, although you are selling their services and goods. Okay, but you're selling them digitally. People are buying online from a website. So you have no permanent establishment, right? So that is one concept. Second is that less capital gains tax. This is very important. I'll give you an example. When Flipkart was sold, okay, Flipkart was sold. Who bought Flipkart? Which company bought Flipkart? Anybody knows? Walmart, right? Shehbaz is right. Walmart bought Flipkart. So when Walmart bought Flipkart, okay, basically it was sold for $20 billion, right? $20 billion, I think, was the price of Flipkart. That Walmart bought it at $20 billion. Okay. Now, how much will be the tax bill? So let's assume that $20 billion was it could not be the entire $20 billion, could be less, but let's say the capital cost was less. But what was the profit of the investors and the the price at which they bought the shares and at which they're selling? So they're making a big profit. Let's say the entire 20 billion, for simplicity's sake, or let's say 10 billion was, for simplicity's sake, let's say 10 billion was profit. 10 billion money was made, 10 billion was profit by the investors. Okay. So if they made this profit in India, will they have to pay income tax on it? It's called capital gains tax, right? So will they have to pay capital gains income tax? Yes, no, maybe. Anybody knows? Yes, they'll have to pay. Okay. But if you are in Singapore, and long-term capital gains tax, I think in India is 10%. Okay. Depends like how it will be long-term, short-term, blah, blah. It could be anything between 10 to 10% or more even. And so they will have to pay at least, so let's say 10 billion was profit, then they have to pay $1 billion of tax. That's a lot of money, $1 billion. Okay. But let's say they did not do that, right? Because the entire transaction happened in Singapore. There was a company in Singapore. Walmart did not buy anything in India. They bought the company in Singapore. So how much money did they save? At least $1 billion, right? Because in Singapore, there is no capital gains tax. So this is another reason why when investors are investing and they know we expect this company to become very big, someday it might be sold, whatever may happen, they know that if this company may get acquired in the future. So what do? They basically create a holding company in a jurisdiction where there are no capital gains taxes. Okay. There are also some corporate governance norms. Now, what are these corporate governance norms? I will give you an example. Okay. So, for example, in the US, there is the corporate law allows you, okay, corporate governance norms allows you, for example, founders to have some super voting rights. Maybe I hold less than 50% shares, but I can have 70% voting rights in the US. In India, it is not possible, right? So basically, there are some creative things that you can do if you are in the US. Another example, an Indian company cannot do crowdfunding. Okay, you cannot do equity crowdfunding. Okay, you understand what is equity crowdfunding? In India, you cannot do equity crowdfunding. But in the US, you can do equity crowdfunding. There is a Jobs Act which allows you to do equity crowdfunding if you're a US company, right? So if you have a holding company in the US, that can do crowdfunding. If you have an Indian company, it cannot do it. Correct? So there are some corporate governance norms, some things because USA is a more business friendly country, India is less business friendly. So if you have a US holding company, there are a bunch of things you can do that you cannot do in India. This is also another reason why people do a Delaware flip or a Singapore flip, because of the same reason. It is increasingly important for startups to structure their businesses smartly, right? Economic Times article states, there is a link here, you can see here, this is the Economic Times article. It says queue of startups rushing to register abroad gets longer. Here it is talking about why there is a big rush. This is February 12, 2020, last year, right? More and more companies are registering abroad. If you guys want, I'm sharing the link here for you to read this later on at peace. Okay, 1 second. All right. Investors are keen to know how your business is structured even before knowing your business model. Hence, flipping has become very popular. It is also not something that every corporate lawyer is familiar with. So those who know to guide clients through this are in demand and can charge a premium. Okay. So how many of you are practicing lawyers here? How many of you are practicing lawyers here? Are you a practicing lawyer? Write lawyer in the chat. If you're a law student, write LS in the chat. If you are not lawyer, not a law student, write O in the chat. So I will know. If you're a lawyer, you can just write L for simplicity's sake. Lawyer in problem. Don't worry, you'll be fine. Keep listening to our webinars, you'll be fine. Okay. So a lot of law students, a lot of lawyers also, right? So those of you who are lawyers, okay, you can, if you are interested, if you're a corporate lawyer, this will give you an advantage. And I keep saying that, you know, you can always explain this to lawyers. It is such a, you know, if you're a lawyer and you know this, you explain this to startups, they'll be very grateful for you. They'll be very grateful because they don't know these things. What I'm telling now, you know, you go around, even ask corporate lawyers, they don't know this knowledge. They don't have this knowledge. Okay. What I explained to you about equity, you know, crowdfunding, equity crowdfunding, about what I told you about, you know, super majority voting rights and so on, right? Differential voting rights. This is called technically, it's called differential voting rights. These things people don't know about. That is why they are flipping. People don't know about this. What is crowdfunding? It's not, I don't want to explain what is crowdfunding, but imagine. So I'll simply explain to you. Okay, if you want to raise capital from the public, what you have to do? You have to do an IPO, which is very difficult to do. Yes or no? You get it? Okay. Now imagine you could crowdfund your company, which was allowed. Basically, you can't offer your shares to the public. It is illegal without doing an IPO, and you have to go through the stock exchange, which is very difficult. But there is a law in the US and in some other countries also. But in India, in India, if you do this, you'll go to jail. If you try to do a crowdfunding that you are asking the public, come invest in my company. Tomorrow my company will be very big. You'll make a lot of money. You can't do that. It's not legal. It's illegal. For example, if you guys, you know, invested in LawSikho 1 year back, then your money will be triple by now. Okay, if you're an investor in LawSikho, just hypothetically saying, your money will be triple by now. Right? But we cannot say this and take investment from you. It will be illegal to do so. Companies Act forbids it. I'll be in jail if I do that. Okay? I cannot take money from the public to make my company grow, or I cannot take capital from the public. But equity crowdfunding allows you to do exactly that. So if I was in the US, I could do this under the Jobs Act. Okay? This was allowed by the Obama administration. They made a law to allow equity crowdfunding by startups. Okay, there are a lot of restrictions, blah blah, and there are many countries in the world, and there are many companies which do equity crowdfunding. Okay, and raising money from general public. Of course, there are laws and rules regarding that, but in India, it's impossible. In these many countries, it is possible. So you can flip into that country and then take advantage of this. Okay. So good. Thank you for letting us know that more in. Okay. So if you're a lawyer who knows how to do this kind of flipping, you will be in demand. So let me explain to you what is a Delaware flip. In a Delaware flip, how does it happen? I mean, I have told you what it is. Now, what is the mechanism of a Delaware flip? All of the shareholders who hold equity or shares in the foreign company exchange their equity or shares with the newly formed Delaware C Corporation in order to receive proportionate equity shares in the newly formed Delaware C Corporation. Okay, how is that working? Let me explain to you again. So imagine that there is LawSikho in India. Okay, and there is a this is 𝗓𝗏𝗂 India, and there is a 𝗓𝗏𝗂 US. There are two companies, right? 𝗓𝗏𝗂 India and 𝗓𝗏𝗂 US. 𝗓𝗏𝗂 US is a Delaware C Corp. Okay, in US there are different kind of companies you can create: C Corp, S Corp, okay, LLC, and so on. Okay, so it's a Delaware C Corp that where you normally do this. Okay. So what you are doing is that you have created a 𝗓𝗏𝗂 US, which is a Delaware C Corp, and then there is a 𝗓𝗏𝗂 India, 𝗓𝗏𝗂 Private Limited, whatever. This is not the name, but I'm just, for giving a hypothetical example. Okay. So what I will do is that I have created I have incorporated a 𝗓𝗏𝗂 C Corp in Delaware, right? So what I'll do next? Anyone knows what is the next step for the flip? Right now, let's say I and 𝗓𝗏𝗴, two of us, it's not correct. I'm just giving a hypothetical. 𝗓𝗏𝗴 and I hold 50-50 shares in LawSikho. Okay, in LawSikho India. So what we'll do is that we will tell 𝗓𝗏𝗂 US in the Delaware C Corp, we'll tell that 𝗓𝗏𝗂 US that 𝗓𝗏𝗂 US, we are giving you all our shares in LawSikho India. Okay, so my 50% share in LawSikho India, I'll give it to LawSikho US. In return, LawSikho US will give me 50% share of LawSikho US. And same for 𝗓𝗏𝗴. So instead of holding 50-50 in India, now the 100% of the Indian company will be owned by the LawSikho US company. And in LawSikho US, we will get 50% share. Okay, does that make sense? So earlier what was happening in India, 𝗓𝗏𝗴 and I had 50% share. Now these shares we have given away to the US company. In return, the US company has given us 50% share in the US. This is a flip. And my share holding in India, what it was, is exactly the same in the US. And when this is done, there is no capital gains tax that you pay in the US, right? So this is called a Delaware flip. Why are you sharing this chat group, Advocate Ashish Yadu? What is the reason you are sharing this chat group? We need to know that you are not a spammer, scammer, anything. So please explain to us what is the reason for sharing this chat group with me. I think it's only, oh, no, don't do that. Okay. Don't do that. I'll have to remove you from this session if you do that. Don't do that. Try to learn something here. Okay, don't try to promote your group and stuff. So in order to receive proportionate equity shares in the newly formed Delaware C Corporation. So how many of you understood how that flip works? Did you understand? Did you understand how the flip works? You got it. Okay. If you are a business, company, or a startup who caters to the US population, or makes a product for USA, or have international ambitions, this flip is highly relevant. Okay. Flipkart, by the way, never did any business outside India. They're an Indian business. Till they had a Singapore holding company, right? So even then it made sense for them. But especially if you have a global ambition, it does not make too much sense for you to do all of your international business from India, given the tax structures. So you might, and also you may want to raise money from investors abroad. So you will want to do a Delaware flip or a Singapore flip. Here is what happens in a Delaware flip, right? Most of the time, the Indian promoters will subscribe to securities in the US holding company incorporated in Delaware by offering shares in their Indian company on a share swap basis. This would result in the US company having 100% paid up capital of the Indian company, and the Indian promoters holding 100% stake in the holding company. The strange nomenclature of this kind of transaction also comes from this flipping of shareholding. Okay. Delaware has the most sophisticated and comprehensive law when it comes to corporates in the United States. So we are now talking about why people, why Delaware, why not some other place, okay? This is very important. So if you want to understand why people from all over the world flip to Delaware and set up their companies in Delaware, you have to understand why Delaware is a corporate heaven of the world, and apart from being of the US. Delaware has the most sophisticated and comprehensive law when it comes to corporates in the United States. It is one of the most popular jurisdictions to register your company in, not only for US corporations, but even many international companies. Okay. Delaware is the most favorite among investors because the laws are predictable and certain even in complex situations. There's the reason why this has happened. Delaware wants to attract companies from all over the world, so they have created some of the most business-friendly laws in the world. Not only that, some 100 years back, they set up Delaware Chancery Court to deal with all the company law matters. And the judges there only deal with company law matters. They're very business friendly. They understand, and they have created a strong jurisprudence over the years. So even before the matter goes to the court, people know what to expect. So people settle. The disputes don't drag on. You don't have to actually go to court and fight it out, because all kind of matters have already been, ruled. So you know what to expect. There is no surprise. It's not like maybe if I go to the court, I will get a different outcome. No, you know exactly what outcome you will get in most cases. So people don't bother to go to court. They just settle. They just figure out what to do. The rules of financing and governance of corporations, such as terms of preferred stock, special class of shares with additional rights, and rules related to voting rights of investors, are intuitive, predictable, and very flexible. Okay. Financing and corporate finance is easy. Corporate governance is easy. Okay. So you can have whatever terms you want for a preference share. In India, we call preference share. They're preferred stock, right? So you can create additional rights. The stockholders of the Delaware Corporation can act with only a simple majority vote, while other jurisdictions look for unanimous or super majority consent. So in India, for example, for most of the things to be done, okay, a simple majority is not enough. You need a 2/3 majority of shareholders for many things. But that's not how it works in Delaware. Delaware, even you have a simple majority, it is enough. You don't need special resolution. With a simple majority, you can do things. So it makes attractive. It is a very attractive jurisdiction for investors most of the time. Okay, many people prefer it for this reason. A Delaware company can effect a merger with another company with the consent of a simple majority of shareholders. You don't require the consent of the minority shareholders, which may be attractive to a lot of investors. This can also be attractive to a potential acquirer. Okay. Furthermore, the asset of a Delaware corporation can be sold to an acquirer with the consent of simple majority of shareholders. The advantages of choosing a US company also helps in listing on many stock exchanges. Okay, especially in the US. So if you want to raise money from the US, you have to have a holding company in the US. Much easier. Delaware C corporations are synonymous with convenience and ease of doing business in the corporate world. Right? You're going to come, if you're a corporate lawyer, you need to know about Delaware C corporation, especially if you want to do international business. So do you guys want to know what is a C corporation and why C corporation? You want to know more about C corporation? Yep. Okay, great. It has been a norm in the US that a company has to be a Delaware C company before an investment is even considered. Okay. They are preferred more over LLCs, as the selling, transferring, and changing ownership of LLC is difficult. LLC is a limited liability company, right? If you want to raise investment, don't create LLC. Further, Delaware C corporations are even considered over Delaware S corporations. As S corporation, shareholders can only be US citizens, residents, or just natural persons. In case of a C corporation, even another company can be shareholder. Even foreign citizens can be shareholder. Okay, you got it, the difference between LLC and S corp and C corp. Why C corp is preferred? C corp is more flexible. A VC firm will not be considered as a natural person, right? So if a VC firm is investing, it needs to invest in a C corp. Can another company be member also in C corp? Yes, it can be. That is the whole point. It is even more appealing to VCs because C corps can issue various classes of stocks, different classes of stocks. Preferred shareholders get higher dividends, can have extra voting rights, can also convert to common stock if the company goes public. But remember that this is not just for VCs, this is good for even founders. Founders can also benefit from this. As the allotment of stocks can get innovative in this structure, it is easier to issue sweat equity to the long-term loyal employees. VC firm is a venture capital firm. VC firm is venture capital firm. Then there is the Delaware Court of Chancery, which I told you about, which has a reputation of siding with the good faith decisions of directors. An internal shareholders board of directors conflict can be resolved amicably and quickly in these courts. Okay, the Delaware law is just, flexible, just and comma flexible. Sorry, it is just, it is flexible, easier and fast. This reputation has been developed over the centuries. It has not happened overnight. They have fostered this reputation over centuries. That's what makes it one of the best jurisdictions in the world for incorporation of world-class companies. Okay, so from all over the world, people incorporate in Delaware. Tempted to register a company in Delaware in case you have a business? That is exactly what drives business owners and investors to consider Delaware flips. What are the considerations for a Delaware flip? Sorry, there's a problem. Slide. A non-US company can choose to form a new Delaware C companies for a lot of reasons. The USA is a major source of investment in the form of private equity and venture capital, right? So if you know you're going to raise money from either venture capitalist or private equity, right, VC or PE money, then you may want to have a Delaware C Corp because it is the preferred place for them to invest in. US investors often have a strong preference for IP that is located in the United States. So this whatever IP you are creating in your startup, you may want it to be owned by the holding company, although it is not necessary. But at least if it is held by Indian company and Indian company is held by US company, then that is a nice thing. Okay. The world's biggest stock exchanges, including the Nasdaq or the New York Stock Exchange, are located in the United States. Therefore, it is easier to do an IPO if you are a US-based corporations. In fact, the rules are different from foreign corporations. Foreign corporations, the bar is higher for them to do an IPO in the US. If you're a US C Corp, then you can do an IPO in the US far more easily. Okay. Tax considerations matter. Going public in India and then repatriating profits back to USA is big issue, right? So if you do an IPO in India and there are foreign investors, for them to get money from India will be very hard. It's a big issue. A lot of founders can move out of India and settle in the USA and obtain visas through this kind of structure. If you want to live in the USA, getting a visa in the USA is far easier. If you run a US corporation that has raised money in the USA, you will get visa very easily to live in the USA. If you have a C Corp and that has raised money in the US. Indian companies hiring most employees in India, generating IPO, doing R&D in a far lower cost jurisdiction like India, while selling products in the USA or Europe can very easily raise a lot of money in the USA due to massive competitiveness over local US businesses and arbitrage opportunities. And same for even Kenyan companies. If you are in Kenya or any other developing country, South Africa, where the costs are low, Pakistan, could be anywhere, right? So you have the same advantage as Indians, because if you can create IP in India, do R&D in India at a far lower cost jurisdiction, right? But you're selling in the USA or Europe where prices are high. So you are engaging in cost arbitrage and you'll be very competitive, right? For example, you are running a very good digital agency or an advisory business, maybe a law firm. You're running the law firm in India or in Kenya or in South Africa or some other jurisdiction where things are cheap, and you are providing services in Saudi Arabia or where the prices are high, or you're pricing or you are providing services in UK or US or Australia. Okay, doing this online. Now remote work has made all of these things possible. Then you will be making a huge profit because the prices are high while your input costs are very lower, and you'll be able to compete with people. You are much more competitive than local businesses. Legal issues to consider before flipping. Before an Indian, this is purely Indian law. It won't be applicable anywhere else. But still, I wanted to share. There may be similar issues in your country, so you have to read the laws of your country and see whether your country has similar laws also or not. They might have or may not have. You have to see. It is either a yes or a no. You have to check if it is there. Round tripping under FEMA, Foreign Exchange Management Act, 1999. Round tripping is basically sending funds out of India and then reinvestment of these funds again back in India. This is to be considered when the founders of a holding Delaware C remain resident in India. The Reserve Bank of India does not allow an Indian resident to set up an overseas company, further set up an Indian subsidiary, or acquire a foreign company that has invested in an Indian company under automatic route without getting specific approval for the same from RBI. Okay, if you're resident in India, you cannot just set up an overseas company that will set up a for Indian subsidiary. That is not possible. So you have to check if IP of Indian companies is transferred to the holding company. It has to be done at a fair price and the correct valuation as per Indian law, which can be tricky as Indian authorities frown upon value being shifted out of India. Okay, what is considered fair price today at an early stage of a business may be considered very low later at a stage when the business has grown much larger, triggering tax officers to question the valuation at the time of flipping. If the flip involves transfer of shares, which is often the case, you would have to pay capital gains tax. Okay, in the early stages, the shares will be cheaper and therefore the tax would be far less, rather than a flip at a stage where you have received many rounds of funding or the business has become profitable and large. Does this make sense, or are you finding this too complicated? Are you understanding what I'm saying? Does this make sense to you? No? Yes, no, maybe, lost, complicated, yeah? Please make it simple. Okay. Okay, just see this, okay? You have to, do you know what is capital gains tax? So if I buy something at so basically, let's say I have, okay, I'll give you an example, okay? So let's say I buy shares in the stock market, okay? And I buy for 10 rupees, but then the prices go up and I sell it for 20 rupees because I am making this profit of 10 rupees, right? I have made a profit. Do I have to pay taxes on it? Yes, no, maybe? Yes, right? That is called capital gains tax, correct? Now, let's say I have created a company. Now, obviously, I have subscribed to the shares at a price. If it is as face value, maybe at 10 rupees per share. Let's say I have 100 shares at 10 rupees. What is the price of that? 100 shares, 10 rupees, 1000 rupees, right? So I bought these shares for 1000 rupees. Okay. Now the company becomes successful. Okay. Now I am able to sell this company for 1 million rupees. Let's make it simple, 1 crore rupees. Okay. For 1 crore rupees. Okay. 1 crore, I mean, is 100 million more. Okay. So, or anybody else who's not Indian, let's say $1 million. Okay, let's say I have bought it for $1,000, selling it for $1 million for simplicity's sake, because there are a lot of people from other countries, they will not understand, right? So let's say 1 million, I'm selling it for $1 million. The company is successful. Now I'm selling. How much profit I made? What is my profit? I'm making it simple, $1 million, right? I bought this share at $1,000 and then I'm selling it at $1 million, right? 9 million? No, it's not 9 million. From 1 million minus $1,000, how much is it? Okay, it's like 9999 like that, right? So anyway, so it's, let's say almost $1 million only. 1,000 less, $1 million, right? So let's say almost $1 million, slightly 1,000 less than $1 million is my profit. Okay. Now this, I am getting $1 million. So $1 million has to be taxed for capital gains, right? I will have to pay the tax on that, whatever is the rate. If the rate is 30%, I pay whatever, 300,000. If it is 20%, I pay 200,000, whatever is the percentage, I pay that. Correct. Now when I am doing a swap, right? So let's say I am exchanging the shares of these two companies, right? So I am selling the Indian shares to the US company, right? I am giving away. So the US company have to pay taxes because it is buying, right? I have to pay taxes because the Indian tax authority will say that, okay, if you sold this share for, you should have got some money, you should have received some money. Even if you did not receive anything, we will tax you on a notional amount. That if you sold, how did you sell it, right? You have received something, right? US law doesn't think so, but in Indian tax department can create such problems, right? If you are selling your share, you must have received some value. So if your company is generating $1 million, then if you're selling the share, it would have some price at least. So you will charge you for selling the shares. It can happen. If the founders remain resident in India, then another difficult question may arise. Is India the effective place of management of the business? So Indian tax law says that even if it is a foreign company, but is the effective place for management of the business in India? If yes, then India will apply the income tax. So even the entire global income will become taxable in India. Do you realize what I'm saying? Okay. So if I'm running a business in Dubai there is no income tax, and all the global business is happening in Dubai. Okay. So it is receiving money in Dubai. But Indian tax department will say, no, you have to pay tax on your income in Dubai because let's say all the directors are sitting in India and running a business in Dubai, but they are not in Dubai personally, they're in India. Then Indian government will say, no, you have to pay taxes. Because you are resident in India, the effective place of management of this company is India. So even if you are not an Indian company, you have to pay taxes in India. Because government is like this, trying to always get as much tax as possible, right? A company is considered to, so then what circumstances it will be a business outside India, big company outside India? A company is considered to have active business outside India when its passive income, understood as an aggregation of sale, purchase, transactions between related by whatever, blah, blah, is less than 50% of the total income, and number of employees in India, values of assets in India, payroll expenses relating to Indian employees is less than 50% of the company's total employees, assets, and payroll expenses over the last 3 years. So in the last 3 years, okay, if just think of it this in a simple manner, that if half of your business was outside India, right? Half of your expenses were outside India, half of your income was outside India, then yes, you are a foreign company. Otherwise, government of India might say that you are an Indian company. This is the problem. Okay. How do we value shares if it is primarily IP? Even then, I mean, tax department will use some method. Okay, so transfer pricing. If this same IP was sold by anybody else in the market, how much did they get, and so on. Like they look at it. Any other company of the similar stature or similar revenue, how much money did they get? It's never possible to get a perfect answer, but they will put some estimation. They'll find some way to estimate the price. Company having an active business outside India is presumed to be non-resident as long as majority of its board meetings are held abroad. So also its board meetings have to be held abroad. For all other companies, the investigation of residents would involve identification of persons who are responsible for management decisions and place where decisions are actually made. Okay, this makes it very hard to avoid Indian tax laws unless you have more than 50% of your business actually outside India. As a matter of fact, a flip is easier to do when you have a small company, as capital gains taxes involved, if at all, are very minimal. When a startup becomes successful, it is going to cost a lot, potentially, if capital gains is applicable. Indian companies also do a Singapore flip. Advantages: in Singapore, I told you Delaware, now at Singapore, no capital gains tax or dividend distribution tax. Income tax is there, but it is low. Income tax is much lower than in India. Easy dispute resolution, top-notch arbitration reputation, right? Enforcement of IP, it is the best country in the world for enforcement of intellectual property. Easier to attract investors, easier to enter Southeast Asian markets. These are the reasons. Okay, so what is the opportunity here for lawyers? What do you guys think? What can lawyers do? If you know all these things about how to flip and you can help companies to flip in other jurisdictions, you can advise them. Do you think there is opportunity? Yeah. Okay, this is just one thing though. There are a lot of other such things are there. Okay, international law is a growing, international business law. Right, it is international business law is a growing and exciting area of law practice. Right, you can help Indian startups to go international, or Kenyan startups, or whatever, wherever you are from. Right, you can help international startups to grow internationally. So even if you look at international startups, US tech startups, UK startups, you want them to go international, this kind of knowledge would be very useful. You can work on exciting matters and find international remote work opportunities. Any of you want to work with international law firms or help international startups? Anybody here who want to work with international law firms or help international startups? Right? Yes, no, maybe in the chat. Okay. 𝗘𝗂𝗶𝗶𝗫. Who is PR? Tell me your full name. Indian tech startups internationally, sure. Helping Indian startups to also grow international. You can today it is remote work. You can work with anyone. So 𝗕𝗂𝗃𝗁, okay. So we have a course with a leading US university, Webster University, on international business laws. Okay. Do you want to know more about this is just one thing where we teach 100 different skills over 6 months, just like this. Do you want to know more about that? Okay, just one second. I'll share the link. I'll show you the course, right? LawSikho International Business Laws. Yeah. This is the course, guys. Okay, we have this course. You will get a certificate from Webster University and also from LawSikho. It's a joint course, obviously, in association with Webster University. I will share the link with you. Oops, sorry. You guys I'm sharing the link with you guys. You can go through this and join the course if it makes it's interesting. Can we buy shares from company which I bought the shares of the same company I applied for have the authority indirectly? I didn't understand. Yeah, I mean, I didn't understand the question very well. Okay, so are you guys connected with me on Twitter? Right? Please connect with me on Twitter. Here is my Twitter profile. Right? Please join me on Twitter. It will be lovely to connect with all of you on Twitter if you are already not connected. Twitter is also a brilliant platform for networking for all lawyers. Okay. Study material ID free. What do you mean study material ID free? What do you mean by that? What is study? I mean, I am not sure what you mean by that. More opportunities that I know what to do. It's great. Awesome. Things will be good. Don't worry, no worry. Study material is free. There is some free study material you can download from there. In most of our courses, we provide some free study material which you can download and read. But the course is not free. It's an expensive course. I think it costs around 70,000 rupees for Indian nationals. For foreigners, it's 1500 USD. Okay. All right. Great. So hope to stay in touch with you. If you guys have any questions, I'll be happy to answer at this time. You guys have any questions you want me to answer? All right, no questions. That's awesome. That means I can go and party. Can we get on a private chat? Connect with me on Twitter, send me a DM. I'll respond. Okay, connect with me on Twitter. That's the best place to get in touch with me with your personal questions. What all are the regulations? What do you mean? What are I told you the regulations. What is any country having a for going to Delaware? So going to Delaware, see, Indian government cannot say you cannot do a Delaware flip. It's illegal, right? But obviously it doesn't want you to always do that. If you do it, it can tax you and that way disincentivize you. But it is also good for Indian companies to raise money from foreign countries, right? When Indian startups are raising money, they are bringing it in India and investing. So government wants that also. So government really doesn't want to discourage Indian companies from Delaware doing a Delaware flip. It will be very stupid to do so. It will be counterproductive, right? So yeah, Delaware flip is not illegal or anything. Company bought 20% share from a limited company, had holding of 29%. By chance, the company had to endorse their shares. Can I buy from that company to have a total of 49% authority? What do you mean by chance the company had to endorse their shares? You mean the company sold the shares? What do you mean? I can't understand. But you can buy shares from anyone generally. There is no restriction on that. Also, companies bound to pay tax on capital gains. I don't understand what questions are being asked. Yeah, you can, government will charge you taxes if you're doing business in India, even if you have a foreign holding company. Cross borders, Netherlands. I'm not understanding the questions. All right. Thank you, everyone. Hope you have a great night and see you soon.